Alright, good morning. Let's go over today's trade plan. So in the overnight session, buyers were active at the 64 to 66 support, and we got a push up into the 72.5 to 74.5 resistance zone where responsive sellers were active. Now at this point, heading into the day, the main economic catalyst is the FOMC meeting announcement at 1 p.m. Central. And typically the market balances within a relatively narrow range heading into the announcement, followed by a directional move. Now, considering that the market has been heading up for the last 4 to 5 sessions, and we've already made a pretty decent upside move here, it looks to be that the upside is already priced into the market, right? So the continuation of quantitative easing seems to be priced into the market at this point, and anything aside from that could result in a downside move. But because we're in a bigger picture uptrend and overall buyers are in control, we're in a bullish market, any downside move into a support zone has high odds of getting bought up. So that means that, once you combine and kind of take the entire context into account, the odds are that after the FOMC meeting announcement, we're still going to get a two-sided type move. It might be a spike higher, followed by, responsive sellers entering the market, pushing it back down again, or, it might be a spike down into a support zone, followed by buyers entering the market, pushing it back up. But, I provided a link in today's trade plan to the FOMC meeting announcement tag. You can click on that to review all the past sessions, all the past Fed days. So that could be helpful. I also posted a link to the prior Fed day where we got a big upside move, like a 25 point move to the upside. I don't think that's in the cards today, right? Like a big spike to the upside. I don't think is in play today. Now we can still get a move higher and go up to perhaps 77.75 to 79.75 or 83 to 85. But that big spike type idea I don't think is in the works today. It's probably going to be more of a volatile two-sided move, right? Where the Fed announcement comes out and either we get a spike down and it's a two-sided move, or a spike up and a two-sided move. Obviously, if we get a spike down into some decent support zone, it has higher odds of resulting in a bounce back up rather than hitting resistance and coming down, because the resistance zones above are based on volatility, and these are fresh all-time highs, so there isn't really any hard resistance or hard target in place for the ES. So we have to keep that in mind as well. So heading into the Fed announcement, any pullbacks into support can still attract buyers. The 63.5 to 65.5 zone can actually cap the downside heading into the announcement, and in the event that we get a push lower, to the next zone, we can still expect buyers to be active there as well. Since we're expecting a relatively narrow range, the odds are that initial support will hold heading into the announcement, and on the upside, the overnight highs can hold heading into the announcement. So we could just continue balancing, in the overnight range heading into the announcement, and then, we get some direction. The overall bias obviously remains bullish, but in the short term, a small pullback to 54 to 56, or even down to 48.5 to 50.5 would not invalidate the bigger picture uptrend, right? So that would still be considered a minor pullback within an uptrend, and we can still expect buyers to be active at those support zones. So in the morning session, we're not really looking to be very active in the market. If you get good trade location where you can get some pretty quick price edge and you're willing to hold a trade perhaps for an hour or two to get a few points out of it, then fine. But if the trade looks aggressive in real time, and you don't feel like you're going to get some pretty quick price edge from the market, then I would just skip the trade and wait, because the morning session typically is very choppy on Fed days. Typically it is a 5 point, 6 point range heading into the announcement. So, it's usually not really worth trading or, putting any decent risk on. So, I would be conservative, definitely heading into it. And then once the announcement's out of the way, then we can get some volatility, and that can make for some, pretty quick trades where, if you're pulling back, for example, to 54 to 56, um, you can get a 5, 6 point bounce quite easily off that zone, maybe even more. And if you get a deeper pullback, then you can get even a bigger bounce. Like, for example, off the 48 half to 50 half, you can get a 10 point, 15 point bounce even on the day time frame. So, it makes sense to save your ammo and wait for some better setups later in the day. But, if something nice lines up early in the morning at a good spot where we're getting good trade location and, it makes sense to put some risk on, then we will consider that as well. So those are really the main trade ideas heading into the day. Let's see how the morning session plays out. Let's see how we're looking heading into, the Fed announcement, 1 p.m. Central. The other markets also made new highs on the year in the overnight session. So right now the overall bias is quite bullish, but again, a little pullback is not going to be a big deal. So, we don't have to continue to just hold at the aggressive location and continue to print new highs. We could get a pullback into support here. So let's be open to both scenarios heading into it, and then if the market provides us some good opportunities, then of course we'll execute there, but we're not going to be overactive. So those are our main thoughts heading into the day. Let's see how it plays out and trade accordingly.